In one of the courses I attended, the mentor had given one nice method to improve the analysis. It was very simple method, but actually it is very effective method. And the method is to do bar replay and go through the trades which you have taken or which you want to take in future. There are charts which are already formed. Go to some chart where you feel that this is a chart where I can take some trade, and then based on your rules identify how it went. Has that trade given your target? Has that trade completed a target, or has it hit your stop loss without completing the target? In future, if similar thing happens, what would you do? What will be your plan? Will you follow the plan which you followed today, or will you modify it? By doing this, you improve your analysis and your mind gets trained. So let's go through the chart for today. This is Bank Nifty 51,300 call, and here we can see trend has changed to uptrend. Earlier trend was down and now it is uptrend. When the trend changes to uptrend and it is just a first candle, then I prefer to buy on retracement and buy in buying reversal points. So I can plan to buy in this buying reversal point or at this swing high, which are appropriate buying points, which I would prefer. I may buy in discount area also, but risk reward will be smaller. So I would prefer these two areas from where I can get good risk to reward. If price comes to 85 rupees, I can buy and I can keep my stop loss to 70 rupees. Now let us see what happened during the day in next few candles. Price kept moving higher, then it came down and it created two selling areas with a change, but trend is not bearish. Trend is still bullish sideways. So we are still good to go long. And in case if price comes here in our buying area, what will be the target? For this, normally our target is the highest close. This is the highest close or swing high. We have these two targets. One target is 147, another target is 167. So these are two possible targets which we can look for if price comes down in the buying area. Prices kept moving sideways for a long time, and then we have a bullish change here. With this bullish change, what happened? We have two new buying areas. One is this buying area which is a reversal point, and another one is a starting point which is slightly lower than this. When I have two areas like this which are over one another, I usually take entry at this high and stop loss is below this low. So as per this method, our entry will be around 121, stop loss will be around 99. And for now, target will be around 144.3 because that is the swing high 144.3 or around 147. So these 2 points are the relevant targets for now based on this entry. So if price comes to 121 rupees, I will buy and I can exit around 144 as first target if I am taking trade based on targets. If I want to take this trade for trend, then I will not book that. I will just keep holding with my stop loss, and if prices continue moving higher, I can get much better risk reward. Here risk reward is very small. From 121 to 144, it is just 23 rupees, whereas stop loss is around 22 rupees. So 1 is to 1. Many people like to take these kind of trades also for 1 is to 1 risk reward, and that is not bad thing. They can take it, that can improve the success rate. Here we can see target has been crossed, but there is no entry till now. We can wait and still trade can be valid. So here it has given entry. We have to place limit order. We cannot wait for confirmation, otherwise there is no point. If we wait for confirmation, entry will be around 130 and target is just few points and stop loss is much wider. So I won't wait for confirmation entry. I place limit order. Then price went sideways. Our target is 144.3, and here what is happening? Price has gone below this. Stop loss is around 99. Price came down. It has closed below our buying area. One buying area has disappeared, but this buying area is still present. It is not showing the buying area because I have kept the setting to start box 1. Now it will show this buying area. Now this buying area is still intact. Higher one has gone, but our stop loss is not hit. Our target is still waiting. From here price reversed, and see this has completed our target. 144.3 was our target and that has been completed. So if our target is completed, we can exit our position or we can do partial booking. After that, price again created a bullish change. Now after this bullish change, we can take entry here. A buy signal will be this. If price comes to this area around 111, will buy, and stop loss will be 99 rupees. Stop loss will not change. Or we can keep our stop loss below this 101.4, as this is our new starting area. So if price comes down here and goes up, we can look for opportunity. But as there is not a big difference between 101 and 99, I'll still keep stop loss at 99 rupees. Now here again we have entry. Price is trying to reverse. Our target is highest close here. So new target for now is around 143.5 and 147. And in this candle what happens, let us check. Price came down again. It has not hit the stop loss. Stop loss is on closing basis. It has not hit the stop loss even now. Even though it went through, it is closing above our stop loss. Again it came up, and here we have completed the target almost. Yes, we are through and both the targets are completed. So this way, either closing basis or high of swing, both targets are done. I prefer the target of highest close, that is achieved much more times. And if we are taking trades based on target, this will be our exit. Otherwise, we can just hold on. And ultimately, stop loss is hit and we have to exit. That's end of the trade. After that, what happened? Prices went sideways, went in some buying area, came up again, closed around 100. So we had kept our stop loss around 99. That is the level where close has happened. It doesn't matter when candle closes here, we have to exit, and that was end of the trade. So this is how you can do bar replay, and you can improve your analysis. You can improve your discipline. You can decide how to change your mindset and how to take the trades based on targets. Would you like to take trades based on targets, or would you like to take trades for trend? And what will happen if your success rate is lower? What will happen when you have less success rate but higher risk reward? Here risk reward is just 1 is to 1, 1 is to 1. But sometimes when trend continues, then we can get much larger rewards. For example, here we had a stop loss of just 20 or 30 points. But for that risk, if the trending move starts and there is move of 300, 400 points, just imagine how much will be the profit. It will be around 20 times of your risk taken. If you take a risk of 20 points and target is 400 points, it will be 20 times the risk taken. So therefore I don't follow, therefore I try to avoid taking targets. I like to follow the trend, and sometimes when there is change in color like this, I book some profits or partial exit is done. After that partial exit, my position is reduced, but my risk is also reduced. We just saw chart of Bank Nifty on 3-minute time frame. Now we will see chart of Page Industries. It is on daily time frame, and we'll see whether this works on stocks or not. As I mentioned, I will not take small risk reward trades. Instead, I will hold on for trending moves. And if I get trending move, I will get better risk reward. So here there is a bullish change in this candle. After that bullish change, what I can do, I will plan my entry here at 34,290 and my stop loss will be around 3370. Some people will say there is a selling area here or supply area here, sell here for this target. I won't do this because there is a uptrend. As trend has just turned up, even though there is a selling area, it is likely that it will disappear because one selling area which was available here, it has disappeared. I'll show that with bar replay. There was this selling area, price went in that selling area, came down. So it is not a virgin selling area, and in next candle that selling area has disappeared. Here we don't have any virgin selling areas. I won't sell here. I will just wait and watch for 34,290. I can keep a alert at that level. See, this selling area has disappeared and now price is coming back in our buying area. It has not touched the buying area. We'll just wait. Price is yellow. There is a bearish change. New selling areas have appeared, but this is a bearish change without break of demand area. So it is yellow color. It is not a strong selling area. It is likely to get disappeared. If price comes in this area, I will buy. So I would have already placed a limit order, and now price has touched and this is my entry. My entry will be around 34,290. After that, let us see what happens. Price has stayed there for 4 days, then it has started moving up. So it is going up. If we take target at this area, highest close, then our target will be 37,380 and this target will be approximately 1 is to 2. So it is a risk to reward of 2.53, reward 2.53 as compared to risk. So 2.5 times reward is possible if I book here. but I don't want to book profits at this level. I want to follow the trend. Now let us see what happens. There is new bullish change again, and our stop loss can be trailed. Now our stop loss can shift to higher level here. But as I said, if there are two buying areas close to each other, it is better to keep stop loss below lower one. So original stop loss can stay. And all the areas of selling have disappeared now. Price went up through. This target is completed, but I won't book, and price has reached here in the selling area. Now this can be used to book profits, but if we are holding on for trend, we can just keep trailing stop loss at original place and just hold on, because when trend continues we get much larger risk reward, and all the selling areas have disappeared. You can see that with this price is moving higher and higher, there are new selling areas. So if we book at that new selling area, how much will be our risk reward? It will be around 6 times. It has completed that target, and now our stop loss will be trailed below this. So if we trail our stop loss below this, our risk to reward will be 3 times. We'll book at 3 times profit as compared to risk taken. Here we are already in profit of 6 to 7 times. Price came down, did not give entry here, it went up again. So prices are already moving up nicely, and we are in good profit. So this is how we can use trending move. It is possible that it can continue going higher and higher and higher, and new trailing stop loss will be available. I won't book unless my trailing stop loss is hit, or you can have your own rules. You can book at 1 is to 5, you can book at 1 is to 7. But if you book, then you will not get trades where you can take reward of 20 times, 50 times, 100 times. Those kind of rewards are possible only when you keep on holding as long as the trend is bullish. In this indicator, I have added one more feature, which is trend maturity. And we can see in the settings, there is a show maturity. We can see there is fresh up, young, and mature up. So whenever trend is mature up, I would look to book profits in some selling areas, or if there is a climatic action, rapid move. After that, I would look to exit. As the trend is mature up here and price has reached some selling area, there are two selling areas. This is starting area of some previous downtrend. So I can look to exit somewhere here, and I may exit. My trailing stop loss will be here. If I want to continue holding for the trend, my trailing stop loss will give me protection, and if prices continue going higher with breakout, I will be still in the trend. So you have to decide your plan and act accordingly.